Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today's Thursday, July 2nd, 2009. We begin with the U.S., where June's non-farm payroll release disappointed forecasts, with the economy shedding 467,000 jobs during the month. That number undershot forecasts of a 345,000 decrease and changes the outlook for the U.S. labor market. Expectations had been for a slowdown in the pace of firings, which could have helped improve the chances of a U.S. recovery. Though we are not near the levels of job losses seen in December through March, it does dampen expectations of a quicker improvement in the labor market. The unemployment rate inched up to 9.5%, which was actually a better than expected result. The euro-dollar pair was sliding overnight following a test of 1.42 yesterday prior to the release of the non-farm payroll report. Stocks were lower in Europe as reports by Fitch Ratings said that Russian banks may need as much as $60 billion of fresh capital to help them deal with bad loans. Given the exposure of Eurozone banks to Russian banks, the news undermined the euro. Following the non-farm payroll release, the Greenback extended its gains, falling to test the area right below the 1.40 level. The weak U.S. jobs report increased the sense of risk aversion and sent U.S. stocks falling. The dollar-yen pair fell 100 pips following the non-farm release. The Greenback did find support from an upward sloping trend line around 95.70. The indication here is that traders are taking riskier bets off the table coming into Friday's thin holiday trading. The pair retraced to the 76.4% Fibonacci level from the rally seen the last two sessions. The yen was a big benefactor of risk aversion today, and the euro-yen pair, for instance, fell 250 pips from its open to trade near 134.30. That wiped away the gains seen from the first half of the week in favor of the euro. Releases from the Eurozone showed unemployment climbing to 9.5% in May, a bigger than expected increase, while producer prices fell 0.2%, a figure that undershot expectations. Both pieces of data show that the Eurozone economy is still mired with weak employment and falling prices. The ECB, meanwhile, held rates steady at 1%, a record low. Trichet said the current rates are appropriate, and the ECB seems willing to assume a wait-and-see approach, and that no rate cuts or increases are on the horizon. Trichet also said he was happy with the bank's first 12-month liquidity providing operation, which supplied banks with a significant amount of money. The Aussie and other commodity currencies were a hard hit today. The Aussie-US dollar pair slid 150 pips, setting a new low for this week. The Aussie was pressured by weak trade data during the Asian session and then fell below the 0.80 level in the wake of the US jobs report. The pair did find support around 0.7940, which was the low from last Thursday. Australia's trade balance posted its biggest deficit since July 2008 in the May period. The trade deficit widened to a seasonally adjusted 556 million Australian dollars as exports continued their slide. Exports are down 5%, continuing the weak demand seen in April when they slid 11%. The global economic slowdown has sapped demand for Australia's commodities, depriving Australia's economy of a key sector for growth. Turning back to the U.S., the news there wasn't all bleak. Weekly jobless claims fell 16,000 to 614,000 for the week ending June 27th. In addition, the total number of people continuing to collect benefits fell to 6.7 million. Also, factory orders rose 1.2% in May, the third increase in 4 months as demand picked up for durable goods like aircraft, computers, and machinery. So, even though the labor market, as we saw today, is still on the ropes, manufacturing is showing some signs of life. Tonight, Australia will post its services PMI, while overnight Switzerland releases data on consumer prices, the Eurozone and UK post their services PMIs, and the Eurozone releases data on retail sales. Tomorrow, US banks and equity markets will be closed in observance of Independence Day. And that wraps up our coverage for the week, as there will be no daily video tomorrow. Thank you for watching us here at CMSFX.com, and from all of us here at CMS Forex, have a great 4th of July weekend.